Hi guys. So today we're going to analyze some basic assets and currencies. I'll be on the daily time frame and we'll look at how the assets have been performing and what is the near term view for them. So let's get into it. We'll first start with gold, which is essentially one of the most traded commodities out there. And as you can see, I'm on the daily time frame and I only have one indicator, which is the EMA 21 moving average. So if you look at it here, what do you see? Long bull trend. If you see, the bull trend has actually been going on for quite some time. Actually, the major possible, I'd say, the stoppage that was there was right here near this level, which was, this became the major support. Actually, sorry about that. This became the major resistance, not support, and the price bounced off it a couple of times, and since then the expansion has actually been very clear. The bullish trend right here, small pullback, continuation, and this is essentially one of the first times that gold is pulling back after almost a 2-year rally. Before that, yeah, since 2020 to 2024 was basically a long range right here, and since then, since 2024, this explosive bull trend has been going on and has essentially never stopped. Now we look at it here, sorry about that. Yeah, so we look at it here. This, if you look at it, it was in a clear trend. This was the, if you say I have to draw a channel, this was the clear channel. After this expansion, which was right here, I was also quite skeptical if the trend would continue. Now why is that? Firstly, because this trend has been lasting for a long time, and this major white channel had been broken right here, and since this was such a strong bull rally, and it was also on the back of no particular news, like no particular bull factor for, I'd say, the gold market, so that was a little skeptical for me, and I was skeptical from right here. And then we had this large correction right here, movement further, which was essentially a pullback, and now it's falling. Now right now, what gold shows at most is a range structure somewhat forming, where this near this becomes the high, this near this, like you can draw it according to you, this becomes the low. I would think that prices could reverse back near to this level as well, this, which would be the 3970 level. But again, the range is right here, not predicting, but from here the prices could do something. They could well bounce from 4500, or they could fall further to the 4000 level. Why do I think there are more chances for it to falling at the 4000 level? The primary reason being that we're currently in the Iran-Israel conflict. If the conflict lasts a little bit longer, because a lot of people are now putting their money into oil and other positions that would likely work out well in the war scenario, gold still has a chance of a major correction. It might still bounce from here and go up, but right now it's not the best market to be in a buy for. You could possibly look for some pullbacks and reversals and downwards, or you could trade this range, but likely that is the scenario for gold right now. It doesn't have a lot of bull opportunities right now, especially if the conflicts last for a longer period of time, which looks to be the scenario right now. Let's move on to the next asset, which is the Nasdaq, and we're looking at the futures market in Nasdaq. Now again, if we look from back, this was the last major support level, resistance level, from which Nasdaq has bounced July, and since 2025 here July, it was probably a Japan event because of which it fell down. And then next from here, I think this was the time when Trump announced his tariffs and all. It went down, but still couldn't resist the entire rally, went up strongly. Now we've been going up for a long time, but if you look at it, the rally has not been strong going up. You see, if you look at it, rally, pullback, small rally, longer pullback, couldn't break completely, another longer pullback, goes up, up, down, up, down. It is not as a clear rally as you would think it to be. It is not a perfect rally. Like, it doesn't show me entirely that it is in a very strong bull trend, like it was probably here. From here to here, it was in a small, like, strong bull trend here, but after that the rally has actually faded quite a lot. So that is why I thought that this would be forming a range somewhat. And again, if I look at it, the range is right here. This is essentially the first week that prices have broken out of this small range as well. It is breaking out. The previous breakouts have all failed here, but another major reason can be because of the Iran conflict. Oil is gaining attention and likely inflation is to be higher. So if interest rates do go up in the US, that would not be good for the stock market, especially when there has already been a lot of talk about extreme valuations in the stock market. Now if you look at it, this was another major resistance right here. Was trying to go up, and finally once it's made this double top right here, since then I have not really been positive about the market. It could still very well be in a range, and maybe Nasdaq sell are not the best trade to take right now. But if you look at it, it is in a clear range, and since almost 2026 it hasn't been able to make a new high, which is not really great news, especially since there has been a lot of talk about the extreme valuations existing in the stock market. I think this market is still likely to either continue in the small range, or in fact in the near term I think it has a stronger chance of breaking out downwards. The initial target for this could be near this level, which would be the 23,000 level, and if it breaks further as well, then this could be the level. That's my understanding, the 21,000 level. So not in a great condition is the stock market, and I do further see downside continuing in the upcoming weeks. Obviously in the short term, small news and events can make it go up and down, but I think till like the third quarter, I think the stock market has a huge possibility for continuing downwards. Now moving on to the next asset we have, which is the S&P 500. Very similar to what the Nasdaq has been doing, not been able to create new highs, and this has essentially not been able to create new highs since almost September, I would say. Just bounce up and down, and can't really break to new highs. Doesn't show that kind of momentum for a continued bullish trend, while it was in a continued bullish trend since Trump announced the tariffs, and they were very less severe than others were thought, and most formed deals soon after. That was the result. That was majorly why this bull rally lasted so long. And now that the tariffs have swept away from people's minds, new things are on the worries, and inflation worries are coming up, because if this war lasts longer, then inflation would certainly be a worry in the US, while the rates are also not that high and they are penciling in one cut for the rest of the year. I think because inflation could last longer and could be higher for longer, that one cut could come down to probably even a hike, which would be not great news for the stock market. Again, trend tried to break out a couple of times, couldn't break out. Right here it's sitting at the lows of the range. Could see a little bit of bounce, but I still see further continuation. The nearest level to target in this one would be the 6,300 level, close to this point, which would also, if you measure it, which would also be close to almost a 1-to-1, I think. Not too sure, but let's see. 373, so 740, yeah, just close to a 1-to-1. I think this range would be recovered. And then again, you need positive news or other things for this market to continue bullish. I don't think the war solving would totally be a bullish news for the market as of now. It might show a dead cat bounce a little bit, but I don't think it would be a complete reversal and would lead to an absolute bull rally and would bounce above this range. So that's an unlikely scenario for me right now. Moving on to the next asset, which is in trend these days and everybody's looking at it, is the US oil. Again, this market had been obviously in a really long bear trend. I think it was in a bear trend since here to here, and when it was around here, 62, I think, then I was like, this year could be really good for oil. And again, since other assets were performing so well and energy was coming a lot more into focus because the AI thing, I had this view, though I was not entirely sure. But after, like, it strongly broke out and pulled back and again couldn't break below the moving average, that was a strong indication that there was something positive in oil. Even if you didn't understand exactly what was the strong part, you still should have been part of this market. Now, strong bull rallies, bull rallies, bull rallies. Again, if you look at it right here, this strong candle went almost up to a 118, 117, right? And the prices to go there is still gonna take time because it needs to be a slow rally upward, which would majorly, the only reason for that would be if the conflicts last much longer and it lasts for another couple of months. I think then it would be a likely scenario for oil to keep heading up to almost 120, 150. It could go up higher, but in the current scenario I think oil could range right here just like it is, but the trend is still bullish. So you wouldn't want to be a seller of oil just yet until you see some strong evidence, as now the weekend is there and Trump mostly announces news on the weekend. So they might target the Khark Island in the upcoming days for oil, and that could certainly lead to a meaningful correction in oil. Sorry about that. So that could lead to a meaningful correction in oil, but other than that, I see the oil trend as intact. Probably a small range would further see the breakout as a bullish breakout. I think that's the most easy thing to see about oil right now. Let's move on to the next asset, which is gonna be Bitcoin. So I don't really trade the crypto market. I don't really like the crypto market. I don't really see the point of crypto market, since, like, it's not replacing anything. Yeah, if you look at it, this was majorly a sentiment driven market. Since Trump was elected, everybody was like, now they're going to introduce something, bring up acts and everything, but I don't think that's what's really happening. If you look at here, this bull rally, pullback, strong bull rally, but now if I look at it here, you see a clear wedge formed here, which is right here, and after that the oil just kept on falling. My first target was this level almost, and when price came back here, I was quite sure it would rebound a little bit, but since it didn't rebound and essentially still continued bearish, was a good sign that there are not a lot of buyers in the market. From almost, like, I think 125 to now it's trading at almost 70k. So that's a big fall for Bitcoin. That's like a 42% drawdown for Bitcoin, which is not great for the crypto enthusiast. And if you even look at it right now, this strong bear rally, come up, go down, can't break down, that's true, but can't really break up it as well. So I think if this could possibly be a bear flag. So now it has had 1, 2, 3 touches upwards. I am still think I would like to be a seller of Bitcoin until I see some kind of range form here, which is very clear. And if the range does form here, it would likely be from either this point to this point, or it would be from this point to this point, where it doesn't really have anything. So there can be here, but I'm not entirely sure. But I wouldn't be a buyer of Bitcoin if I was looking at a long-term view just yet. So, but if I look on a weekly basis, I'd still think the trend is bearish, and I would look for possible bearish opportunities from somewhere here near the highs, or if it turns below the moving average and pulls back, then I'm gonna look for at least a touch to the near lows, which is gonna be 64k. Let's look at VIX. So the VIX has bounced, which is pretty obvious by now because of the Iran conflict, and it had reached quite a high, like 34. So if you would have bought just volatility around, the end of Feb, you would have made good money on it. So that is one of the most important things you have to think about, even if you don't know which direction the market is going to go in, or if you don't know that what would be the ideal trade to represent your trade idea. You could always just be long volatility because you knew that the Iran conflict was coming, and you had to know that volatility is gonna spike. It's still not breaking below the moving average, which tells me that volatility could still increase in the coming days. So you have to think about that. Yeah, now moving on to the next asset, I'm going to move on to currencies, which is actually my main thing. That's the main thing I like to trade. That's the main thing I express my ideas in. I think trading currencies, why do I trade currencies? The first important thing is that I think currencies is such a huge market that size doesn't matter in there. So and you get a lot of leverage in these, and you can get great positions. And essentially, while every other market runs on sentiment, the currencies market do not run on sentiment. They need to be clear reasons to buy or sell the underlying currency against the other currency, and you get a lot of diversification in the sense, like if you're looking at the British pounds against the Aussie dollar, so you get a lot of differentiation. You need to look at what is the benefits of the pound against the dollar, is the carry trade on. So all those things, I think they give me a lot of trade opportunities, better trade opportunities. And typically you can catch great trends in currencies. Like I've had some great success with currencies, so I think catching trends in currencies is not that hard once you start looking at it, from a perspective basis. So now if you look at it here, all the year from 2024 I was tracking the British pound. It was on a huge bull rally, primarily because the rates were really high. And I remember thinking at this bull bar, this could be the true exhaustion. This could be the true exhaustion of this entire trend. Now why did I think that? Because this has been going up since almost 2024 2023, because the rates were really high. If you look at it here, if you were bullish the entire 2024, you would have made good amount of money till 2025. And after that, the British government, the growth had slowed, and it was expecting that the rates would cut. While on the Aussie dollar side, the Aussie dollar didn't have that much of a downside, because they said that they didn't pull rates in much like below. So they didn't have to do so much of easing. So, and it's a great carry trade currency, because typically the rates are always high in the Aussie dollar. So this bear rally is existing. Also, the growth in UK is still very much like shaky, and also because of the current crisis where UK has a higher oil will create higher inflation right now. That's why the trend is in stopping mode a little bit, because higher inflation would still mean higher rates in the UK. That's what I see right now in this. If you look at it, this has been a clear bear trend. Now it's currently in a channel type of phase, channeling down. Could be the final bear channel, could be a simple continuation, you never know that. But right now, if I were trading this is at the highs, I would likely trade it to form a range. Either a range would be formed from right here to here, or I would see that it continues bearish, comes back and continues further bearish. So that is my outlook for it right now. If I see this break above, I would like to see it to go all the way here. Sorry about that. I would see it to get all the way here, right? All the way here. And if not, then I would likely see this come back here, and then break further bearish for a continuation, which currently with the fundamentals looks a little not happening to me. I think most likely it will form a range right now. So that is what I'm further looking at. I think this will go up to these highs near the 1.993 level. So that is my current hypothesis. This week still would be great. I don't see a lot of reversal signs in this currency. So that's what I'm looking at right now. Looking at GBP CAD. So here again, very similar thing from 2025. It hasn't really gone bullish because of the GBP not really going bullish a lot, while Canadian dollar has also not been going bullish, because last year growth in Canada was also not particularly strong, and their economy was not really expanding, and they were also decreasing rates. But right now you see this bearish fall. It can't break out below this entire range, cannot break out below that, and you see it pulling back into it. Now Canadian dollar would benefit a little from higher oil prices, since it's a net exporter of oil, especially the US. So right now we could see some limited moves in either direction, but I still think if I look at it in the short term, I think GBP would likely fall against the Canadian dollar. So there you have it, the strong bull closes and now pulling back. I see likely continuation next week, further bearish. That's my hypothesis right now for the pound and loonie. Moving on to the next one, which is the GBP/JPY. Now this was one of the major currencies that I think I traded and I profited off a lot. You look at it here that in 2025 most GBP pairs have not really been bullish, whereas the entire time the JPY has been going down and GBP has been going up. Firstly, because obviously one of the most low yield currencies is JPY, so that's why it becomes a good currency to trade against, and GBP has had a higher interest rate, which becomes a great carry trade for it. But now, since there is volatility and also there has been a little bit of intervention from the Japanese policymakers, majorly like verbal intervention, not any clear intervention, but they have shown plans of probably a hike coming soon. I think that's the major reason now it becomes a range. And if there is further confirmation that a hike is going to come in April, I think this can continue in a range while still continuing upward after a little while. Right now it's still going bullish. You would be good to be a buyer in the short term. You could trade it to the next highs. That could be a good trade, but ideally still, because the intervention could come at any time and they are looking at hiking the rates, that would be one of the major reasons not to be really short JPY, I think. But short term positions, you could still look for longs easily. You would get good 1 to 2, 1 to 3 risk to rewards if you look at the right position, right timing. You need the right timing in this. Looking at the next one, NZD in USD. Now this is one of the very interesting pairs, right? If you look at it here, it has been in a range for I don't know how long even. So if you look at it here, a little back, you see this range, right? Never broken out, never going anywhere, but still presenting great trade opportunities. So I don't really like to be a buyer of the New Zealand dollar, the Kiwi dollar. I think primarily because I don't see the growth outlook to be that strong, and it's majorly exporting things like grain and meat, so I don't see a lot of bullish potential for it. So that's why I don't like to be long the new Kiwi dollar. In fact, my overall view was short the Kiwi dollar, which I will tell you in the Aussie dollar and Kiwi dollar trade just now. So if you look at it here, now it was going bullish. Now this was a great time to be short the Kiwi dollar. Why is that? We knew volatility was gonna spike. We knew flight to quality would be there, and the first currency to benefit from flight to quality is of course the US dollar. So right here I took a very small position. I think with the breakout and pullback and breakout, I think I exited that position. It was also near the previous highs, so you could see a small range forming right here too. So that was one of my trades for it, and I would still I have like a very little position still on that I would likely like to trade till these lows, the 0.56 lows. The only reason being that firstly, in any scenario, the Kiwi dollar does not benefit from a prolonged war, while the US dollar does from the flight to safety mechanism. And the Kiwi dollar would also benefit if the local economic growth was strong, which is not. So that is the major point right now for me why I'm not long the Kiwi dollar against the US dollar. Doesn't make sense at all. Moving on to the next one, moving on to one of my favorite ones, I think would be the Aussie NZD. What's up? Let's go into it. Perfect. Right here, this was probably one of the best trades I've ever had. You look at it here, I was tracking it since a long time. If you look at it here, 12% up. This is one of the best trades you can catch in currencies, I think, probably. From here I had already seen that the prospects for the Kiwi growth were very slow, and the Aussie dollar was actually expanding with higher interest rates. So I was long from here, and I think I had exited this trade near the last highs. Yeah, right here near the last highs. I had exited this trade. I entered some more. It was also the end of 2025. I entered some more, I think, right here, but I didn't hold it all the way here, which is one of my major regrets. So in these currencies, you will get the best opportunities. I think these currencies present you with the best opportunities. If anywhere you bought near here, right, minor double bottom also forming here, you could have bought here, bought it for a good 1 to 2, 1 to 3, 1 to 5 even on the shorter time frame. If you look at it here, see, you have this range forming right here, right? You can see the range forming right here. First attempt to break, failed, pullback, failed, comes back, can't break down the near support level, comes back. This is a minor double top that formed right here. If you look at it, yeah, this is the double bottom that formed, a sweep below double bottom, and you could be a buyer right here after the strong 1 hour close. You can even look at it 4 hours, not a problem. You see here, minor double bottom, sweep, goes up. You can be a buyer even here, doesn't really matter. It's in trend, and you could hold it till you see some kind of reversal signal. So I would hold it till here, and once it goes up here and cannot break out and also forms a wedge right here, this and this, once it breaks out near this level, right, this small range gets broken into, I would exit the trade ideally. And this would have been a great trade. This would have been a 1 to 5 trade with a really small risk but a huge reward. That's what you're looking for. You don't need to trade every day. You don't need perfect trades. All you need is a good trend, and you need to participate in a couple of times to make money. Good trend, great trend, fundamental analysis is with you. Aussie dollar typically gets more affected even in such situations, but New Zealand dollar is also pretty much very much affected. It won't go up essentially. So this trade essentially works out great for you. Sorry about that. Moving on to another great currencies which you can trade in these kind of environments is the Aussie dollar and Japanese yen. Again, carry trade, perfect carry trade almost. I remember looking at it here. This was the last high when it was the first time that Japan had something announced about increasing interest rate. I remember seeing this fall and I was like, wow, that's how brutally carry trades unwind. Everybody was long here to take advantage of the spread, and right here they were brutally cancelled out, got up, down, up, couldn't break below this. And then as situations got better, and this was right around the time that the stock market started going up, this was right around the time, and you can see again clear exhaustion symbols. Clear exhaustion. How clear can you see it? Clear exhaustion, no follow through. Clear exhaustion, no follow through. Comes up against up the moving average, pulls back, can't even break the moving average. You can be a clear buyer of it here, and if you had held this position here, you could be long as much as you wanted to, right? Again, very good currency to buy at small pullbacks. If you look at it in the 4 hour time frame, whatever your logic might be, I think whatever logic you're trading to buy in a trend, you could use that. I typically use the high 2 from the Albrook's method, or double bottoms, double tops, kind of a thing. So if I look at it here, my strategy would be, I would buy it right here, minor double bottom, right, comes back, pulls back, can't come below this, another double bottom right here, right, this becomes the high 2 from almost the same level, breaks it above here, I would buy it, and you can just keep buying it at almost all levels here, range. Now the most important thing, if you're thinking about exiting this trade, like where do I exit? Now obviously you can use the risk to reward function, right? You can exit it if you bought it here with an SL right here. You can exit on a 1 to 2, but in these kinds of trade, it is best that you make as much money as you can out of these. So I think from here I would likely wait for a high not to be broken, like this mini, when it can't break this high, right? I would exit it here and starts moving below the moving average. My ideal trade would be exited right here. So 1 2 3 risk to reward, but I would just sit on it, and if I get another opportunity to buy it somewhere down, I would buy it again without a doubt. I would not worry about it. Even if I get cancelled out once, I'm not really worried about it, because it has given me such a great risk to reward. If you bought like earlier, great risk to reward. This entire year, if you would bought in January, great risk to reward. Entire weeks you could have held the trade. That's the kind of trades you should be looking at. Now let's look at one of another currencies that I really love trading, which is the NZD CHF. Why do I love this currency? CHS has been on a crazy bull rally, even though the country doesn't want the currency to be that overvalued, but it still is, because again, one of the most safe currencies out there, safe havens. As soon as people see any problem worldwide, they start putting money in the Swiss franc, just like gold. It's very similar to gold. So just like that, and NZD is one of the most risky currencies out there. People don't like holding it unless we're looking really strong on growth globally. Great currency. If you would have traded it in the entire last year, you would have made a lot of money out of it. This year, however, I think there is some like possible intervention that you can't yet see going on from the CHF. Otherwise, this situation would be a lot worse. You would see NZD fall quite a lot more, at least to these lows against the CHF, if there was not some intervention going on by the SNB. So I think that's a great clue. At some point they will start to devalue the franc. You could see some possible reversals. If you look at it here, it is clearly still in a clear range, right, with possible downside skews. So you could sell it near the top of the range. For again, if you're in a trend, you just need a reason to sell. It goes out of the range, comes up, takes liquidity out of these. You see the bear bar, go to the 1 hour, you see the bear bar, right? You see this failure to continue, and as soon as you see a bear candle, strong bear bar, sell it. You can keep it right here, keep a wide stop, wait for a 1 to 2 right here, still hold longer. I would still suggest you hold this longer, probably to even these lows, right? These lows, yeah, right here near these lows. This would be the first target, and further target could still be this. So 1 to 5 trade it could turn out to be, if you have a good understanding of what's the major trend and how you need to play it. So that's it for today, guys. This is the major currency analysis. I'll try and be more detailed about week to week currency analysis from now on. If you like the kind of video I just made, like and subscribe, and tell me if you need any other kind of content. Thanks, guys.